of you present here. On behalf of Selan Exploration Technology Limited, I welcome all our dignitaries, stakeholders, and esteemed guests on this 39th annual general meeting of Selan. This meeting is being called through video conferencing without the physical presence of the members at a common venue in accordance with the latest guidelines and regulations issued by Ministry of Corporate Affairs and Securities and Exchange Board of India. The requisite quorum is present at this meeting and I call the meeting at order. The notice conveying the 39th annual general meeting along with the audited financial statement of the company for the financial year ended 31st March 2024 and the audit report and the report of the board of directors together with the corporate governance report and management discussion and analysis report have been already served to the members on 6th of September 2024. And with the permission of all the members present, the same is taken as read. The annual report and notice is also available on our website www.selanoil.com as well as on the website of stock exchanges. Please note that the statutory register and documents as referred in the notice conveying this meeting are available for inspection to the members electronically at our website. In compliance with the provision the Companies Act 2013 rule made thereunder, the company had provided e-voting facility to its shareholders who were holding shares as on the cutoff date, that is 23rd September 2024. The e-voting period remained open from 27 September 2024 to 29 September 2024. Those shareholders who did not cast their e-vote and holding shares as on cutoff date are eligible to cast their vote during AGM through e-voting. Mr. Ankit Singhi, practicing company secretary, has been appointed as scrutinizer in respect of e-voting at AGM. We have with us Mr. Suniti Kumar Bhatt, our Honorable Chairman, Mr. Shiva Kumar Potpulli, and whole-time Director and the CEO, and Mr. Rajiv Tirupati, CFO of the company. Along with them, we also have Chairman of our Audit Committee, Mr. Manjeet Singh, Chairman of Stakeholder Relationship Committee, Mr. Manjeet Singh, and one of the Independent Director, Mr. Baikunta Nath Talukdar. The AGM shall begin with the speech of Chairman of the Board, Mr. Suniti Kumar Bhatt, post which will allow the speaker shareholder to ask their queries. Now I request Mr. Bhatt, to our Honorable Chairman, to proceed further with the AGM. Over to you, sir.
Thank you, Yogita. Thank you very much. Dear shareholders, I am delighted to present to you the annual report of Selan Exploration Technology for the financial year 23-24. This year has been marked by significant progress towards the first steps that we have taken in creating our vision of a sizable independent oil and gas company within India. Our key strategic focus for the year has been on maximizing value from our existing assets and chart a clear path towards our future growth. While we were getting ready for tomorrow, we continued our focus on safety, innovation, sustainability, which continue to play a pivotal role in our day-to-day operations. This year, we made considerable progress in our development activities with several high-impact wells that will continue to provide a solid ground for us to stand on in the coming years. Our commitment to environmental stewardship and community engagement, sustainability is built into every aspect of our operation and will continue being so. This year, did we not only meet our objectives, but we also set some new benchmarks in our operational excellence and innovation. Our theme for this year has been unveiling success, fueling growth, and shaping tomorrow. Hopefully, you will get a better feel for it as we go through the remaining day in this AGM. It reflects our journey of transformation and innovation and sustainable development. It is just the beginning of the journey, and we hope to unfold the full journey as we go through the years that we hopefully will work together. I'll just like to start with an overview of the year that has gone by. The financial year 23-24 for Selan has been a period of robust growth and strategic advancement. We have, throughout the year, ensured smooth and safe operations and enhanced our production by drilling new wells in undrilled areas within our existing field. We have also increased our operational efficiencies by investing in cutting-edge technologies. Fiscal year 24 has been a significant year of growth, both organically and inorganically, with significant additions to our asset portfolio. Those efforts have strengthened our foundation for future growth also and will help us achieve robust financial results in the coming years and have helped to achieve good results in this year itself. I would now like to go through some highlights of the year that has gone by. In terms of revenue, Selan achieved a substantial 36.6% year-on-year increase in gross revenues, including treasury income this year, despite the fact that we had lower year-on-year price realizations compared to the last year. The revenue growth was driven by enhanced production efficiencies and production volumes. We will continue our focus on optimizing our core operations and exploring more production by going into different areas of the fields. And this seems to have paid off. It has reinforced our belief in our technical ability, our financial astuteness, and our hunger for growth as we go forward. The second part I want to talk about is our profitability. Our profitability has witnessed a significant boost with around 6% year-on-year increase in net profits. This was the result of disciplined cost management, improved operational efficiencies, and strategic investments in high-yielding projects. We think our ability to maintain strong margins while investing in future growth reflects our robust financial health, prudent practices, and strong internal controls. I also then want to talk about some other strategic initiatives. This year, or the year that has gone by, which is fiscal year 23-24, we had a significant appraisal and development activities program that has been very fruitful. We had very high impact wells that we drilled in undrilled areas of our fields, and they resulted in robust production growth and opening up these areas for us. We invested in expanding our geological and geophysical understanding through studies, leading to identification of new drilling locations. These initiatives are set to bolster our resource base and long-term production potential as we continue our journey in the coming years. We also had a robust operational growth. In terms of production and sales, we have increased our production by sales by around 45% compared to last year. It was primarily leveraging our expertise on increasing volumes by the technological implementation, better reservoir management. The key fields like Bakrol and Kyrgyzstan have seen record levels of production because of the drilling and subsurface understanding that we have brought to the table in the year fiscal year 23-24. We have had some excellent cost optimization initiatives in terms of drilling our wells, and we'll continue to focus on optimizing the well and the field performance by deploying technologies. In terms of technologies, our innovation remains a cornerstone of our operations. This year, we introduced several technologies in our advancement of studies. For example, in our geophysical and geological studies, we use artificial intelligence and machine learning drone approaches to figure out which areas of the field should we go to and how to reduce the risk of failure and get better bang for the buck. We, in terms of operational efficiencies, moved towards something called pad drilling. Typically in Selan, we would only drill one well per pad, but we have started doing multiple wells from the same pads. That has helped actually increase the Kyrgyzstan production to the level we have, also helped Bakrol to a large extent, and you will see us pushing the pad-based drilling concept more and more into our onshore operations. It is sort of taking an offshore concept whereby all the wells are drilled from a single location and moving into onshore. Because we believe that our operational controls are strong enough for us to manage multiple wells from the same location. We also ensured real-time monitoring of our drilling operations, which has led to the growth that you're seeing. Real-time operations and real-time execution planning of our frac operations, and also managing the data and data analytics on a real-time basis from the producing wells to do better reservoir management. It also increases production, but it also reduces our cost and gives you operational advantage in terms of your lifting costs going forward. I also want to say that what we saw last year in the fiscal year 23-24, we continue to see it in the first quarter of this year. In first quarter of this year, we actually are well within the guidance we had given you last year, which was 30-35% increased production is what we are expecting this year. We are on track to deliver the production. I just want to specifically point out a couple of things in that one. I would encourage you guys to look at production volumes from us going forward on a quarter-to-quarter basis rather than a month-to-month basis. The primary reason for this being is bulk of our sales happen by moving inventory through trucks from our operation into Nawagam operations of ONGC. While we have a full control on our operations, we always do not have a full control on how many times can I empty the tanks in Nawagam. So over a quarter, you get a better understanding of linkages of sales to production volumes rather than looking at a year to year. I know we gave a guidance around the exit volume. That's why in fiscal year 23-24, we had actually specifically shown the sales volume of March because that was well within the guidance. We wanted to show to our shareholders and members that, look, this is the kind of exit rates that we had from the fields on basis of which we are talking about 30-35% sales growth in this year. We are on track to deliver the sales growth in this year, and we hope to have robust sales volume in the remaining quarters of this year. As far as the years that will be beyond this year are concerned, I think we'll come to you guys with guidance on the production growth, revenue growth towards the end of this year as we firm up our understanding of a longer term potential of the existing fields and some of the newer fields that we are analyzing. Moving on to community engagement, our corporate social responsibility programs continue to make a positive impact on the communities that where we operate. This year, we have expanded our education and healthcare initiatives, benefiting thousands of individuals. This year, our community development projects have focused on infrastructure and livelihood improvement and hopefully have further strengthened our bonds with local communities. We believe local communities is where we derive our license to operate, and we'll keep on working on this aspect of our business as we go forward. In terms of expanding our footprint, in terms of expanding our operations strategically, we have also identified key opportunities in the year that's gone by, which is fiscal year 23-24, by doing strategic acquisitions that align with our existing operations, fit in with our vision of what we think Selan is going to become in the years to come. And what we have been always saying is our focus will be to become one of the leading India-focused energy companies in this part of the world. We believe these acquisitions will enable us to accelerate our growth and drive long-term value for all our shareholders. I think in terms of the acquisitions, some of the key ones that I want to talk about, the first one I want to talk about is the lately announced acquisition of Cambay Field. We have executed a farm-in and farm-out agreement in which we acquired 50% participating interest in the Cambay Field in the Cambay Basin itself. It's in Gujarat. It provides operational synergies with what we do. The geological understanding of that basin is very similar to one basis of which we have delivered a successful drilling and development campaign across our Bakrol and Karjisan fields. We believe that that experience and the fracking experience is going to put us in a advanced position to unlock the value of that basin. We currently are operating the field. We are the operators of the field as a part of the acquisition. We are analyzing the subsurface data and the reservoirs, and hopefully we'll soon come to you with what we think is the production potential of that field and give guidances on when to expect significant revenue growth from that particular asset that we have put in our portfolio. We had, in the years gone by, acquired Elav. We have finished drilling a well in Elav. We have 100% participating interest in it. While the Elav well shows an interesting sand, which has gas presence, we think, in it. We are still continuing to evaluate it. As have been always saying that Elav is not a large discovery or a significant field, but it might add a couple of years of potential revenue as we go through analyzing that, and as we home in and agree on what to do as the next steps post drilling in Elav, we will keep you guys updated. We also, in the year gone by, announced the board approved merger of Selan with Antelopus Energy Private Limited. basically, the upcoming merger with Entlopas represents a pivotal step in our growth strategy because we believe that the merger will provide synergistic opportunities that will aid us to diversify our portfolio across multiple sedimentary basins away from just the Cambay Basin. We are actually, with this merger, once it goes through, we will get exposure in Assam Arkan Basin. We are going to get exposure in Mumbai High Basin. We are going to get exposure in KG Basin. We will get exposure in Mahanadi Basin. So basically, it moves us from a single basin company to a multiple basin company with a significantly large reserve base and asset portfolio, and will launch us from being just a pure onshore operator to an onshore and offshore operator, and hopefully get us in being sizable independent oil and gas company, energy company in the next 3 to 4 years within India. I think we are glad to report that we are in the last stages of this merger process. I think you guys should have already gotten a notice. I think for you, because the stock exchanges and the regulators, everybody has approved and given their blessings to the merger. Currently, we are now seeking blessings of our shareholders for this particular process. Once those are with us, hopefully, we should be able to move from a company that has 5 million barrel resource base to a company that has an order of magnitude higher resource base to play with, and therefore deliver results for all our shareholders. So I encourage you guys to watch out for that email and look at and give us your feedback on moving forward with the merger. As we look to the future, our vision is clear. We want to lead the energy sector in this country with innovation, operational excellence, and sustainable practices. We are confident that the strong foundations that we are creating in the last few years will continue to drive our growth. Our strategic roadmap, which hopefully is becoming clear to all our shareholders, includes further enhancing our production capabilities, expanding our development and production operations across multiple basins in the country, and moving from onshore to offshore and frontiers beyond. And in this process, we will definitely look at strategic alliances. We'll look at having more partners on board, and hopefully we create something of substance and value for all our shareholders. In conclusion, unveiling success, fueling growth, and shaping tomorrow is more than a theme or a motto. It encapsulates our journey of transformation that we have just started, and the small glimpse of growth that you have seen over the past year. We have successfully unveiled some new milestones that will fuel our growth with some of the strategic initiatives that have gone in the years past, and hopefully laid foundations for a sustainable and a prosperous and a growing future for all of us. We hope the small achievements till date are a reflection of our dedication and hard work of all the Selan team, and the support of our shareholders in our vision to create a steadfast energy entity in this country. As we move forward, we promise you that we will remain focused on harnessing advanced technologies, expanding our market presence, and maintaining our leadership in the energy sector, particularly using technology and innovation. Together, we are not only shaping tomorrow, but I think we are also ensuring that our legacy of success and growth continues for many years to come. I would want to thank you for your continued trust and support as we have embarked on this exciting journey. I would also like to express my deepest gratitude to our shareholders, partners, communities, and employees for their unwavering support through this period and their trust in us. Your belief in our vision is instrumental in our success. As we move forward, we remain committed to delivering a superior value and driving sustainable growth. Thank you for being a part of Selan's journey, and we hope that together we will build a much larger energy enterprise in the years to come. Thank you very much.
Now, can we take the questions?
Yes, we can take questions.
Yeah, first I would like to call Mr. Ajay Jain for their query. Mr. Ajay Jain.
हर बार की वही तो फोलियो है, बताइए आप भी। हाँ ये लो, वही फोलियो बिक तो सकता नहीं है।
Sorry, sir.
अरे मैं एक मिनट रुको तो सही, एक मिनट रुको तो सही यार। ये देखो, ये है 120 447, 4/0 153 843।
Sir,
I
Ajit
think
Jain.
Ajit,
हाँ तो ठीक है।
Sir, I
और
think he's
दूसरा
busy
है
with
जो
something.
I think can you
So,
move some? I think he's busy with something else.
right, sir. So now I'm calling Mr. Kanhaiya Agarwal to ask his queries. Mr. Kanhaiya, can you hear us?
Hello.
Yes,
Hello.
yes, we can hear you.
Yes, good morning, everyone. Thank you very much for providing the opportunity to speak at this platform. I would like by starting to congratulate the management for the wonderful set of result and the introduction speech, which clarified most of the points. I had sent in my queries through email. I'll just go through it again for the benefit of other shareholders. Uh, First, sir, can you please share production volume data in BOEPD terms for the last 4 quarters, that is September 23, December 23, March 24, and June 24? Second, in the last quarter of FY24 presentation, you have guided for 30 to 35% of volume growth in the upcoming year, which translates to around 1000 BOEPD. While for the first quarter in FY25, company achieved 1100 BOEPD. Does it mean that the sales volume over the next 3 quarters will be lower than 1000 to meet the guidance, or does it mean that we will achieve more than the guidance provided for FY25? Next, for further drilling campaign in Bakrol and Karjisan, do we have to get FDP approval post EC approval, or FDP approval is already in place and EC is pending? Can you please let us know the sequencing of both the approvals? It's not quite clear to me. Next, given that Karjisan field has historically seen rapid decline, how will we recover the decline in Karjisan field to meet our guidance in FY25? Are we expecting the increase in Bakrol production to make up for expected decline in Karjisan? Next, out of the two fields of Bakrol and Karjisan, which have higher PAT margin? Next, for Synergia Cambe field, what is likely to be the peak production and PAT margin at peak production level? What are the timelines for the start of production, and how many years will it take to reach peak production? And last, sir, for Synergia field, do we need to get EC and FDP approval, or all approvals are already in place? If you could answer these questions point by point, it would be highly appreciated, sir. Thank you very much, and all the best for future.
No, thank you, Kanhaiya. Ji. Let me try and go through, because I do have a list of questions in front of me that we had talked about. I think, as I said, because the nature of operations, particularly the oil sales operations in Bakrol, is sort of a batch process, because we produce continuously, but we put it in tanks and then we basically process the oil and then we send it across to Nawagam for selling. So I would encourage you guys to look at quarter to quarter numbers rather than month to month numbers, because month to month numbers, sometimes I offload only twice, sometimes I offload once, 3 times in a month. So it keeps on changing a little bit depending upon also how we are agreeing with the off-taker, because we process through ONGC's facilities. Typically, there is always going to be a difference between production volumes and sales volumes, but what matters to us is always sales volume, because sales is what we get paid for. So please look for quarter to quarter, and we will give you quarter wise for all the years. I think one field, so that you get a feel for what the fields are doing and how you might expect them to perform in future. As far as our guidance last year was concerned, which was 30 to 35% higher, we are comfortable about that. We think we will definitely meet that guidance, if not exceed it, as we go through the year. We're actually seeing a robust performance from the core field, which is Bakrol. Actually, Bakrol, we drilled 6 wells in Bakrol in this campaign. And those 6 wells are producing as much as the remaining old wells are producing. And Bakrol, and you did mention it in one of your questions, Karjisan fields oil declines faster because the water cut develops higher, much faster. Bakrol does not have the same issues of water cut development. So we are expecting Bakrol to carry forward for many, many years. And because we have drilled only 6 wells, we probably will drill more wells in Bakrol in years to come. So, and it will keep on providing the solid ground, and Bakrol will be the cornerstone field as far as the Cambay Basin is concerned, given the current assets of the Cambay Basin. We will come with the guidance as we go towards the end of this year sometime for the next 2 years. We will give it to you. But a couple of things I want to highlight in here is we will definitely at this stage, we are extremely confident of delivering the guidance that we have given you towards the upper end rather than any other thing. I wouldn't read too much into the fact that Q1 was 1100 barrels of sales, therefore others will be lower. Let's not read too much into it. Yes, there is a decline in fields, but that decline is not something substantial. If anything, our fields currently seem to be doing better than what we had thought when we started this journey last year. So that's a good news. I think you picked up on Karjisan field itself. I will pick up some of these. If I have missed any of these questions, Kanaya, please ask me again. Kanayaji, ask me the questions, and I will like to clarify again. Karjisan, yes, it declines faster. It does decline faster. It is because Karjisan is a small field. We have only 5 square kilometers in Karjisan. Bakrol, on the other hand, is a 30 square kilometer license, and the Karjisan field is much smaller. You remember it was shut in. It was when we talked about it, it had just 1 well. Currently, we have around 5 wells producing in Karjisan, both oil and gas. We should see significant ramp up in gas production from Karjisan because we have just added a new buyer for gas in Karjisan, and oil continues to be is flowing. We will look for additional places to drill in Karjisan. As soon as we firm them up, we will come to you guys. But we'll try to get as much out of Karjisan in the next 1 to 2 years as possible, because Karjisan, in terms of per barrel, has the highest impact on PAT. The reason being, Karjisan is still on the old fiscal regime, while by cess and royalty rates are still not the ad valorem ones, but these are the subsidized rates. And this will continue to 2030. So you will see, from a pure commercial perspective, we will actually try to make sure that we get as much production out of Karjisan before 2030 as technically feasible, because the wells in Karjisan pretty much pay very, very fast. Within a year, we get our payback of the wells that we have drilled in Karjisan. So please watch out for that, because we do like the field. It's a small field. It's not going to be with us for at these volumes for next 5 years, 10 years. But definitely for the next 2-3 years, we would like to keep it at these kind of levels. And then we have also seen something interesting in the western flank of Karjisan. We might do something like that we did in Bakrol, but till we actually get our geophysicists and all fully signed off on that one, we will come back to you guys with a little bit more details on Karjisan. Now, how are we planning to grow in the next 2-3 years? I think you have already picked up on the fact. We will look at growing through synergistic acquisitions. So Synergia is one of them, or the Cambay field that we acquired from Synergia is one of them. We are not expecting a major production bump to come from Synergia in this fiscal year, because this fiscal year, as of today, is primarily for us going to be understanding some of the reservoir behavior. Because we are now operating it, we are collecting some of the data that makes us, helps us make decisions in terms of what to drill, where to drill, and things like that. Probably in this year, we are going to do a couple of workouts in the field, test some of the hypotheses we think are some of the we see low-hanging fruit, and if they work on basis of that, probably next year we're going to start drilling a few wells in Synergia. As far as clearances is concerned, I think all the environmental clearances are in place for Synergia in terms of new drilling. The FDP is already approved as a part of the extension of this field, so which envisages drilling 3 wells, which is what we have agreed with our partner. So hopefully we will drill them in the right places based on the data acquisition we will do this year. Same thing with the other field, which is going to come into a fold post-merger, which is Dwarmara in Assam. We are hoping to start drilling in Dwarmara sometime towards the end of this calendar year or towards the last quarter of this fiscal year. as we go through the process, and then try and understand the production potential as we have earlier given to you guys. I mean, all these onshore fields together are start to fill in the production declines that some of the other onshore fields will create. But the idea is that we put enough opportunities and get them into production through our sustained effort over the next few years, so that it's not something that we're fighting a decline. We're actually increasing the overall production of the company. That's the idea. It's not just to arrest the decline. But what we do know is that for us to increase production substantially of the company, it is the new fields that need to come into play rather than just the existing fields, because the existing fields, let's not forget, they have been producing since, some of them have been producing since 1985, 1990s. So so we just need to get fresh blood into our portfolio to create a growth that we'd like. The next thing, if I remember correctly, you talked about the environmental clearances and the FDP process. So yes, we do need both of them in place before we start drilling. But these are not sequential processes. We can have something going on. We can have an environmental clearance going on in parallel while we have FDP approval going on in parallel. So, for example, in Kyrgyzstan, we are at the fag end of getting our environmental clearance for further development wells, and also the FDP for the shallower part, or K3 part of oil development part, which we found through this appraisal campaign that we just did last year. So that FDP is about to get approved by the regulator. We have also applied for EC. The other thing which I want to say is that in EC, we tend to apply for more wells that they are in FDP, because FDP is a much quicker process than EC. So you will always try to make sure that ECs are there, because ECs last around 10 years. So that if I keep on revising the development plan, I don't have to keep on doing EC again, because you would want to see that if all my best case comes through, then study the environmental impact and make sure that you are happy with it, and the environment ministry is happy with it before you start drilling. So FDP sort of runs parallel, but once we get an EC, it is normally much bigger EC for multiple FDPs that might get consumed within the process of developing the fields. So for Bakrol, the EC process is on. I think in this week, sometime we have a public hearing scheduled for the expansion of Bakrol. As soon as we are done, couple of months later, hopefully we get the EC done. And next fiscal year, we are hoping that we kickstart some of the next phase of drilling campaign in Bakrol, assuming that everything sort of goes as per plan. Hopefully I answered most of the questions. If there is anything that I have missed, please let me know.
Sir, the next shareholder is Mr. Santosh Chopra.
Okay, Santoshji.
Hello. Hello, am I
Yes.
audible?
Yes,
Yes,
yes, you
sir,
are
you are
audible.
audible.
Thank you, sir. Let me start my video.
Santoshji, yes.
Let me start my video, sir.
Yogita, is video enabled for?
No, sir, they cannot. Sir, you cannot start your video. You can ask your questions.
Okay. Thank you, Yogita.
Thank you, sir.
Sir, I am a senior retired citizen from Delhi NCR, Ghaziabad, and have invested my family funds in companies like yours.
Thank you.
I thank Yogita, company secretary, and her entire team for giving me the opportunity by registering me as a speaker and sending the link. I would have appreciated much more if she or her team member should have rang us a day in advance, telling us our speaker number, as also provided us the technical support like audio, video, etc., as other PSU companies are doing. In all cases, they are doing this practices. They are prevailing in all in other companies. Moreover, there are so many companies AGM today that it is
Yes.
very difficult to wait. for anyhow. This is the session for Yogita for the next year, please. Sir,
We
I
take your
congratulate.
feedback on board, Santosh ji. We take
I
your
con-
feedback on board, and we'll try to
okay.
incorporate
Let me
in the next
continue,
year's
sir.
agenda. Please,
Let
sir,
me
do.
continue. Sir, I congratulate the management for good results for the period under review. I also suggest to continue VC meeting as also it is good for senior citizens. As most of my related queries have already been covered by you, sir, and previous speakers in their statements, I'll limit my queries to a few. Any impact of union budget on the operations of the company? What is COPEX in next 2 to 3 years? Sir, what is the
Yes.
revenue breakup? What is the revenue breakup in A, sales of crude oil, B, natural gas, C, interest income, D, net gain on sale of investments? Second, what is the location-wise sales split? Barkol, Kyrgyzstan, and Lohar. Third, when company will start paying dividend? Fourth, how much equity is with the government institutions vis-a-vis public? These are my few queries. So I request you to kindly reply. And for Yogita, it is my request to uh, keep my session in mind for the next year. Thank you, Yogita. Thank you, Chairman, sir.
Sure, sir. We will note down your.
Thank you, Santosh ji. Santosh ji, as far as union budget is concerned, I think we are impacted no differently than most of other oil and gas companies. But one of the main things we are not impacted by is the windfall tax. Because windfall tax was introduced, it doesn't impact Selan because our production volumes or our oil production volumes in the fiscal year which is previous to that were not high enough for us to come under the ambit of windfall tax. So so that part doesn't impact us, but any impact in terms of GST changes, things like that, like everybody else, it impacts us. So the whole industry, while we pay GST, there is no reverse charging mechanism in the upstream oil and gas industry. So like other players in this sector, like ONGC, Kane India, Oil India, HOAC, we sort of go through the same thing. Now we do not get any significant in impact which is different to others. In terms of our sales, as of today, we have nearly 70% of our sales are coming from oil and around 30% of our volumes are gas. We get better for every equivalent barrel. Our oil prices are better compared to gas because even with the gas prices that are currently prevalent in Indian market, on a barrel to barrel basis, oil is still more profitable. And we show it in all the quarterly results. For the next 2 to 3 years, as you were asking about what should be our capex outlay, for next to 2 3 years, the projects that where we are looking at spending the capex is across the Selan and the Antelopus asset that will post-merger hopefully come in is going to be Dwarmara. Dwarmara and all, we have already given a guidance that for first phase around 100 crores. For Selan assets, it will be within, it is not never going to be large. I don't think for that we need to raise capital. For Synergia, the Cambay asset that we've just gotten, we are analyzing what to do and where to do it. As soon as we have a little bit more detail on it, we'll tell you about the capex piece of it. The biggest capex that will come through our doors is going to be the offshore developments. As we will go through towards the end of this year, we will come up with guidance on capex as far as that is concerned. Interest income is becoming smaller and smaller portion of our total revenue because we have invested the money back into creating the production increase that we have given over the last 2 years, and you should be able to see that. Our philosophy is that we are an oil and gas company. We will actually try to get more returns on the money that we have by deploying in high quality, high profitability assets like I was talking about Kyrgyzstan and Bakrol. As far as the split of production is concerned or sales is concerned across Bakrol, Lohar and Kyrgyzstan, sir? We do give it across every quarter in our quarterly presentations. We'll send it again across to you. Yogita will send it to you. But primarily, as of today, nearly 60% of our production is Bakrol. Then around 30 odd percent, give or take, is Karjisan, and Lohar is a smaller portion. We expect that to continue. We expect Bakrol to be a major part of our onshore production in Cambay Basin, followed by Karjisan. We're hoping that Cambay field that we just acquired is going to start adding to it, but we'll come to you soon on that one. The last one I want to talk about is the shareholding. I think from a shareholding perspective, I think as of today, around 30% of the holding is with the promoter group, which is Blackbuck Energy, and around 70% is with general public. I am not aware of any government institutions having any holding in Selan as of today. I think we have around 2.5%, but that is in the investor protection thing, which is actually a public shareholding rather than the government shareholding. Dividends, I think currently we are looking at growing value or creating value for all our shareholders through reinvesting the money in the projects, because we have a robust pipeline of projects to develop. So we have not declared dividends as of yet. We will look at this policy as one of our bigger fields starts coming into production, and we do understand the need for dividends for people as we go through. So bear with us for us getting one of the bigger fields into production, and then probably we'll look at relook at our dividend policy going forward. Hopefully that covers all the questions that you had, sir.
Sir, in addition to the information, we also provide the shareholding detail every quarter to our website as well as on the website of the stock exchanges, so they can check from there also. So the next shareholder is Mr. Rahul Periwal.
Hello, am I audible?
Hello, yes.
Okay.
Yes.
Thanks for the opportunity, and I will read all my questions. Maybe you have addressed them, so kindly ignore in that case. My question is like, what are the Ceylon's key growth strategy over the next 3 to 5 years, particularly in the context of expanding production and entering into new energy markets? My second question is how Ceylon leveraging advanced technologies like AI, machine learning, and real-time data analytics to optimize all oil and gas exploration and production. My third question is, given the global focus on sustainability, what initiatives Ceylon taking to align with India's energy transition, especially in area of carbon reduction, renewable energy, and possibly green hydrogen? So probably this is a little irrelevant question considering we are basically focusing on oil and gas as of now, but such a cash flow and the talent team in place, probably in the mid to long term, you might have to think about another other energy space. And so any discussion which is ongoing on the board and which you can share with us is like highly appreciable. My fourth question is, can you elaborate on how your recent merger with the Antelope Energy will enhance Ceylon's capability, particularly offshore production and operational synergies? I think that is in presentation, but still you want to make certain point, then please kindly enlighten us. My fifth question is, in the event of prolonged period of low oil price, like ongoing due to oversupply, or maybe let me put in this way, strategic price suppression, how does Ceylon intend to protect its profitability and ensure shareholder value? We have heard a lot about we importing oil from Russia and then processing and selling it across. So what's a larger stakeholder into the business, which is government support to Ceylon and commitment to them, and how they are walking the talk in last 3 to 4 or 5 years, considering the current regime is the same. My another question is how Ceylon positioning itself to remain competitive in the global energy market amid increased competition from alternate energy sources. Again, this is a mid to long term question, and so you can address accordingly. And then potentially regulatory shift, especially in the light of environmental concerns. So Uh, that's a little in a business perspective, but let me ask in another perspective how Selan management will address the question of a fifth grade or sixth grade student who is concerned about environment and the way we explore or exploit the whatever the word we wanted to use as per the management's philosophy in the context of larger goods of the human values and society. That's another question. With the global conflict creating uncertainty in the energy market, how does Ceylon want to secure and expand its export market and while managing the geopolitical risk? So I think this is more relevant in today's time. Another three, four questions, I will put it quickly. What role do you see government support, particularly under the discovered small field policy, playing in expanding Ceylon's production capabilities over next 5 to 10 years? And we're really interested being a shareholder into that kind of horizon because we feel even not only quarter on month on month, but quarter on quarter is too early a period to look or overlook to the business. My another question is, how do you current production sharing contract with the government policy influence your investment decisions, especially in terms of expanding offshore or into new basins? So again, whether the government is walking the talk or not, if may I ask straightforward. Uh, what are Ceylon's potential future government policy around the renewable energy and hydrogen? How do you plan to transition or diversify if government increase support for alternate energy sector? And while asking this question, nuclear energy is in my mind and back of my mind because again, such a talent should think about that area. A small nuclear power project, which Bill Gates is also talking about, is going to be the future. Then government focus on reducing oil import, increasing domestic production. What role Ceylon playing in achieving India's energy transitions? How do you plan to collaborate with the government on this front? So a little bit of collaboration front, if not competition or royalty or basis, you can elaborate. And any target in financial ratios like ROC, ROE post merger. That's another way we look at financials going forward, including the cash flows. So hope someone has noted, and if not in this platform, maybe later on, and on someone can address the questions. I appreciate you, Lynn, hearing me patiently. We stay there for long term.
Thank you, Rahulji. I think I did try to note as many as I could, and if something is missing, we'll actually get back to you later. But I think not in the same order that you asked the questions, but I will just take them because it is interesting. Uh, because you're looking at, I can see you're looking at it from a very long-term perspective, and that's really what this industry needs because it is a long-term industry. I think I want to start with an interesting question we said, which is around environmental concerns and how do I respond to a fifth grader. I think the board talks about it all the time. I think one thing we as a board are very, very aware of is that we can't ignore things that are happening in the outside world, right? And therefore we need to be aware of it. We need to know that something disruptive in terms of technology or something can come in, and how ready are we to the best of our ability to deal with that. So we do actually send our people into new energy seminars around green hydrogen, uh, around so far we have been focusing on looking at hydrogen and some other forms of energy, which is something which is allied to us because we are used to doing that in the oil and gas. But for a fifth grader, what I will say is that uh, we need to first look at India because that's where we sit. I understand the need for looking at the whole earth as such. In India, most of our energy is still coming from coal. So anything we can do to phase out coal from our energy mix, I think our Prime Minister has been saying it for some time, is that we need to get to a 30% gas in terms of the energy basket compared to 6 odd percent that India is still in. I think global average is way out there, is at around 25. We're nowhere close to that. So it is going to be a journey in terms of moving to cleaner sources of energy. I think the biggest cleaner source of energy that we can easily make a transition to as we go forward as of today is natural gas. I think that is the stated policy of the government also to a large extent, and therefore some of the price deregulation that has happened around gas. I think that is the piece we are completely on board with. If you look at it, what we have done over the last 1 year in a small way in our existing operations, we have actually made sure that every well that is producing in our field, we actually try to harness every molecule of gas. And we have basically last one of the big projects, infrastructure projects we did, apart from drilling wells, was laying a pipeline in the whole Bakrol field to make sure that there is no molecule of gas that escapes into the environment, but actually is taken in and processed and made available for as a fuel. So which replaces basically primarily a liquid fuel or a solid fuel somewhere. So we make sure that there are no emissions, and it is as realistically minimum as possible for us going forward. And we will focus on doing our bit in getting India to the 20 to 30% gas in its energy basket as we will go through it. Because then from gas to hydrogen, we think is an easier jump, because hydrogen sort of is in that phase, particularly green hydrogen, which is perpetually you can renew it and has very little environmental impact. The merger with Selan is also sort of underpinned on that, via Selan and Antelopus, because uh, Antelopes, the bigger portion of the Antelopus portfolio is gas. Cambay acquisition was also aligned with that, because Cambay is primarily a gas field, the deeper piece of Cambay. Dwarmara is gas. Mumbai offshore, uh, the anchor project is gas. Mahanadi offshore, the anchor project is gas. And we think gas will play a big role in decarbonizing in our journey of decarbonization as far as India is concerned. So we are there. We will keep on looking at alternate sources of energy. We're currently looking at implementing some solar projects at a small scale in our operation. Try and see what they will do. On and off, we have toyed with the idea of a hydrogen pilot. We still know that it doesn't make money, but we have a team that is internally keeping a watch on this quite with a lot of focus, because we think in the mid to long range, these are some of the things that we need to be aware of. We need to be ready to absorb. One thing I can tell all our shareholders is that while we do not have large R&D capability, but this team is very well versed with being the first implementers of technology at a scale. As soon as we see it is even at a small scale being done somewhere, as these things mature, we will come to all of you guys and share with you as we are looking at this transition. I think a part of this transition is, I think, as hopefully once the merger is done, and we seek everybody's support in voting for the merger, because the merger voting is open from today till Saturday. Is you can see how we look at it, because the change, the company name will be changed to energy. So we are moving in from exploration to energy, because we think eventually we'll have to see ourselves as being provider of energy to the nation, and it has to be from sources that make sense on all fronts, on environmental front, on economic front, and everything else. We continue to get good support from the government. I have to say that. I think, but like any other private enterprise, we would always like more support than is being done. So I will always find 5 things that could be done more. But we are getting good support from the government. I think some of the policies which have liberalized the oil and gas, they made it much easier for us to execute and do things in a fast pace. I think 6 years or 7 years back, I don't think we could have seen us walking into Selan and drilling 14 well program without the support of the government that we got in the last drilling campaign that we did across fields. In my opening speech, I had already talked about the next 3 to 5 years growth and AI ML in our technology. So I don't want to repeat that, but hopefully we carried answered most of your questions. As far as export is concerned, unfortunately, none of our contracts that we have in whether they are PSC or RSC contracts allow for export of energy. So that is off the table. That's a big, I think, and we can understand that because we are getting paid international prices for a country that imports 80% of its energy. Whether you have export in your contract or not is sort of irrelevant. Hopefully that answers any questions. If not, we will actually then later on send them directly to you if you have missed. Yogita?
Yes, sir. We have one last speaker shareholder, Mr. Karthik Bhatt.
Hello?
Hello. Yeah, I'm
Yes,
audible.
Mr. Bhatt.
Yeah,
Yes,
yeah.
you're audible.
Thank you for this opportunity. So firstly, I wanted to understand, is there any plan to hold a quarterly or half-yearly investor call post the results going forward?
We will start. We will start. Yes, I think as
Okay,
you must have seen over the last years, is that we have started to engage with the investors quite, in a more transparent fashion, and hopefully, quarterly investor calls will become a feature as we go forward.
sure.
If not the next quarter, then definitely the quarter after that. Probably we'll start with an investor call. We believe that it also gives us a lot of feedback about your concerns and then we can keep on addressing them. And it's good to hear what our shareholders are thinking.
Right. So, on the macro side, I just wanted to understand how are things shaping up, where you keep reading a lot of stuff on government giving more and more focus and emphasis on self-sufficiency in oil and gas. So, if you can share some numbers, in terms of how has the interest of government gone up in terms maybe last year versus this year versus a couple of years going forward. It will be great actually. So some color on how much emphasis is there really on self-sufficiency. I missed the guidance that you alluded to initially. I think I joined a few minutes late. My apologies for that. If you can request if you can repeat the guidance that you mentioned. Uh, I think there is a mention of the investor PPT mentions a drilling program of 14 new wells. So I just wanted to understand a little about these, as in are these onshore, offshore, or what is the further update, with the opportunity size and the tentative timeline maybe for monetization of these. Also, I think the presentation mentions a new facility being constructed to process and handle crude and natural gas being produced from Kyrgyzstan. If you can throw some light on what we are achieving from this and how it will add value to us. And Bakrol, what kind of volumes are we targeting for the full year? I think FY24 was around 500 BOE PD. And Elau field, I think considering that it's twice the size of Luhar field, what are the next steps as such? Some ballpark timelines if you can share on that as well.
Okay, I think I just want to take one after other. I'll talk about the macro thing last because that sort of is the context. Okay. I think the wells, 14 well guidance that we have given, that's already done because the production bump that you have seen from 400 barrels of 450 barrels of sale in the last year to the increased production in 23-24 and the guidance of around 1,000 barrels of sale in fiscal year 24-25 is based on a successful delivery of that program. I think we drilled around 6 wells in Bakrol. I think we drilled, 1 well in Lohar, 1 well in Kyrgyzstan, and I think it is 5 or 6 wells in Kyrgyzstan. 1 well Lohar, 1 well Ilau, and 6 wells in Bakrol, and remaining in Kyrgyzstan. I think Kyrgyzstan, the facilities are finished. I think that when we started this journey, Kyrgyzstan was a small gas field that got shut in. It had 1 well producing. It got shut in, I think not the previous year, but the year before that. And it was producing nothing. But as of today, Kyrgyzstan is oil and gas facility that can process as much oil and gas as Bakrol can. It's not as big as Bakrol, it's a small field. But as of today, Kyrgyzstan nearly is 30%, Rajiv, is that correct? Is around 30% of our sales volumes, and Bakrol is around 55 to 60, and Lohar is a little bit there. Karjisan has proved to be actually that was a good positive surprise because these are the most profitable barrels because of the production sharing contract the way it is. As I said, Lohar, I think we had said it last time also, Lohar, we did get some oil, but it didn't move the needle fundamentally on Lohar. So for us, Lohar is a field whereby probably we will not drill any more wells and we're just focusing on reducing the OPEX further. It is already low. It is a profitable field, but we probably will keep on looking at optimizing the cost to make sure that irrespective of the oil price scenario, we keep on making money from it and run it safely going forward. Ilau, I think Lohar is much bigger than Ilau. We have always said, I think from a geographical area perspective, they might be similar in the square kilometers, but for us, Ilau, we have drilled the well, as I said earlier in my introduction. We see zones of interest, but we are still analyzing it before we can even make a comment on what kind of impact to our bottom line will Ilau do. But from day one, I have been saying that Ilau was an opportunistic acquisition. As soon as we came in, we wanted to see how to move away from our core Bakror, Lohar, and Karjisan fields. But Ilau was never supposed to be a big addition to our volumes as we grow forward. I think as far as revenue and production guidance or sales guidance for the year fiscal year 26 is concerned, we will give it to you towards the end of this year, like last year. We will give that guidance primarily because we are analyzing a cornerstone field, which is the Cambe field that we have gotten into this thing. We want to analyze this also and then try and give that guidance with that in mind. And also we're hoping by that time the merger is with us, so we can give you a combined guidance across the 5 basins that we have. On the macro side, I think, we see that the oil price is going to sort of hopefully be in and around at least $70 for at least next 2 years. That's for oil. But gas seems to be robust for next two odd years. So we are wanting to basically kickstart our offshore gas projects as we go forward. We're getting a lot of help from the government in terms of approvals and everything else. I think we are hoping that they will also give more support as we go forward, because definitely as we move offshore from onshore, the technology and the amount of capital that we will invest, we will risk from ourselves, is going to be much higher than we typically do on an onshore setting. But then the production also is always an order of magnitude higher. As India has aspired to move towards self-sufficiency in oil and gas, but I think we're far away from that. I think we still import around 80% of our energy, both whether it's gas or whether it is oil. But every barrel that we produce locally, and DSF has been a big part of that, will help. I think there are only few DSF fields that have come into production since the launch of the whole program. We are hoping that Dormara and our Mumbai offshore, Dormara hopefully next year, Mumbai offshore the year after, will be some of the big cornerstone projects that will sort of realize the vision that DSF had set out for. Hopefully I've answered most of your questions. If not, please reach out to us and then we will try to answer them through mail.
Yeah, thank you, sir. Now I would like to present my vote of thanks to every shareholders, directors, and esteemed guests for attending this 39th annual general meeting. Thank you everyone.
Thank you very much. Thanks a lot, everyone. Thank you.
Thank you.
Thank you, sir.